Hello, welcome to another section of RAD Academy. So today we are going to have a tutorial on single and incomplete records question. That is what we are going to do today. So today we are going to do single entry. So if you've not watched my video on the step-by-step on how to tackle single entry question, kindly watch that video before you watch this. So we are going to take a question, which is a past question, single entry. And I read the question. John's Trading Company is a small business at Abra that operates a retail store. The business has been running for several years and it uses a single entry bookkeeping system. The following information is available for the year ended 31st December 2023. So these are the balances that are given to us 1st January 2023 and 31st December 2023. We have the cash, we have the bank, we have the account receivable, we have the inventory, prepaid rent, accrued wages, accounts payable, prepaid insurance, accrued income, equipment, accumulated depreciation for equipment, furniture, accumulated depreciation for furniture. The additional information, one, depreciation at is charged on equipment at 10% per annum and 15% on furniture using the straight line method. The following cash and bank transactions occurred during the year. Cash sales 50,000, credit sales 30,000, purchases paid by cash 25,000, purchases paid by bank 35,000, wages paid by cash 20,000, rent paid by bank 12,000, insurance paid by cash 3,000, other operating expenses paid by bank 5,000. So you are required to one, prepare the statement of profit or loss for the year ended 31st December 31, 2023, and two, prepare the statement of financial position as of 30 December 31, 2023. So this is a full question of single entry. As soon as you see this question saying that it does not keep a good counting record, that is a single entry bookkeeping. You should know it's a single entry question. So if you watch the step-by-step video, as soon as you see this question, you know what to do first. So looking at this question, the first thing that we have to do is to prepare our statement of affairs. We have to prepare our statement of affairs because we don't have capital in the question. So since we don't have capital in the question, the first thing that we need to do is to prepare the statement of affairs at the beginning of the accounting period. So let's do that. So statements of affairs, assets 1/01/2023. So don't always remember to write the name of the business. Jones Trading, see assets as at the beginning. So that's the assets that is the assets and liabilities that has been given to you. That is on the first January 2023 and the 31st December 2023. So you are only going to use the column for the first January 2023. That is the assets and liabilities that we are going to use. So when we look at the question, we have assets, we have equipment. So when you look at equipment, we have equipment value. And this time they've given us the accumulated depreciation as at that date. So since we have accumulated depreciation as at 1st January 2023, for us to get the value, what you do is you find the difference between the equipment value, which is 20,000, and the accumulated depreciation, which is 5,000. So when we do that, we'll get 15,000. Then we have furniture. With furniture too, there was accumulated depreciation as at 1st January 2023. Then it means you also have to find the difference between the furniture value, which is 15,000, and the 3,000, which is the accumulated depreciation as at that date. Then we can have 12,000. Okay. We have inventory, which is also an asset, and the value is 12,000. Then we have accounts receivable, which is also known as debtors. These are basic things that you should know if you're an accounting student. So 7,000. Then we have prepaid rent, which is also an asset. Expenses paid in advance. We have that, and that is 2,000. Then we have prepaid insurance, which is also expenses paid in advance, which is an asset. Prepaid insurance, which is 1,000. Then we have accrued income. We have accrued income. That is income owing. That is if someone is owing you, just like debtor. So accrued income, you've earned it, but then you've not received the money yet. It is an asset to you. So accrued income is 800. Then we can bring our bank and cash. So our bank is 10,000, and cash is 5,000. So when we add all the assets as at 1st January 2023, you have 64,800. Then we'll come to our liabilities. Liabilities to will do same. We find the liabilities as at 1st January 2023. So the liabilities we have accounts payable, which is 6,000. We have accrued wages. We have accrued wages, which is 1,500. So we add these two to get 7,500. Then we less these liabilities from these assets. Then we have 57,300. So this 57,000 is our capital. We see opening capital, or you can see capital as at 1st January 2023. We are done. Next step. The next step is for you to prepare the trade creditors accounts. It's for you to prepare the trade creditors or the trade debtors accounts. Any of these, you can do that first. But then you have to prepare the trade creditors accounts or the trade debtors control accounts. Trade creditors control account or the trade debtors control account. So that is the next workings that you are supposed to do. That is the next workings that you are supposed to do. So let's do that. So this one is workings too. So we see the debtors control account. So with the debtors control account here, it is the same as the account receivable. So you can write account receivable account. Most important is you making sure you're doing the right entries. So we are going to use the account receivables to record the balances. We're going to use that to record the balances. So when you look at the account receivable, when you look at the account receivable, the opening balance is 7,000 and the closing balance is 6,000. So since debtors is an asset and all assets have a debit balance, then it means that the opening balance will be on the debit side. The opening balance will be on the debit side. So balance brought down is 7,000. So this is how you do it. And the closing balance, and if the opening balance is on the debit side, then it means the closing balance will be on the credit side. So balance carry down, which is 6,000. Then, when you look at the question, we have credit sales, and we all know that credit sales is supposed to go to the debtors control account, which should be on the debit side. So we will come and record credit sales. Credit sales is 30,000. So you look into the question. Any item that you think is supposed to be in the debtors control account, you come and record it. So when we look at the question, it is only credit sales that is supposed to be there. So if it is only credit sales that is supposed to be there, I think we are done. We just balance our accounts. So when we balance our accounts, you have the total for this side to be 37,000 and here to be 37,000, meaning the difference will come to the credit side. And that difference is 31,000. That difference is 31,000. And that difference is called the receipt from debtors. Receipt from debtors. That is the amount that was received from debtors. From debtors. Receipt from debtors. That is 31,000. That is 31,000. So this amount, we don't see balance carry down again, but then we see receipt from debtors. It's just like if you look at previous questions or if you've solved any question on single entry, you will see that sometimes they'll give you the cash from debtors and they'll give you the balances. And when you balance the account, you find out that the 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 difference is on the debit side, and that difference is what we say it is what credit sales. But then in this particular question, cash from debtors was not given to you, but then rather credit sales was given to you. So you should know that if the difference has come to the credit side of the debtors control account, then it is receipt from debtors or cash from debtors. So this amount is from the cash book. You record it in the cash book or in the cash account or bank account. Please do you get it? Okay. So now we are done with the debtors account. The next one that you move to it is the creditors account. So you move to the creditors control account. Before I continue with this one, because we have cash sales in the question, I want us to find the total sales. I want us to find the total sales. So let's find total sales is equal to the cash sales plus the credit sales. So we have our cash sales in the question, which is 50,000 plus 30,000, which will give us 80,000. Now let's move to the creditors control accounts. So with the creditors control account, anytime you open an account, the T account, the first thing that you should be looking for is the balances. So we look for the balances. When you look at this question, it is accounts payable. Accounts payable is the same as the creditors account. So with this question, you can even see the accounts payables account. No one is going to penalize you for that. You can also write creditors control account. No one is going to penalize you for that. So with creditors control account, it is a liability, and all liabilities have a credit balance, meaning the opening balance will be on the credit side. So you can be a balance brought down, which is 6,000, and the closing balance will be on the debit side because the opening balance is on the credit side, which is 5,000. So when you look at the question, there is no item that is supposed to be in the creditors control account. There is no return out or there is no discount received and all those things. So if there's nothing like that, then you just balance it. So let's balance this account. When you balance this account, you realize the difference will come to the debit side. So that difference is what you see payments to suppliers. That was payment to supplier, just like maybe cash or bank. That is 500. So E of is 6,000. 6,000. Yes. So since just like the debtors control account, where the difference is on the credit side, we see receipt from debtors or cash. That's the same way the difference comes to the debit side on the creditors control account. We see it is payment to suppliers or suppliers, cash has been paid to suppliers. The control account, that is where we find it. So if there is any difference, since we already have balance carried down there, we name it as payment to suppliers. Okay, so when we are done with this, then you know your next step if you watch the step-by-step video. The next is to look into the question whether you have to prepare any expenses accounts or income accounts. So when we look at the question, we have expenses accounts that we need to prepare. We have expenses accounts that we need to prepare. So I've told you that anytime you have a question and we have balances, we have balances on expenses in the question, then you should know that you have to open an account for that particular expense. So when we look at this question, we have accrued wages, we have prepaid rent. So let's start with the rent. So when we look at the question, we have prepaid rent, which has a balances on it. So as soon as we see that, then we should know that we have to prepare rent account. So we open a rent account. Open a rent account. Please don't write prepaid rent account. The prepaid there is just to help you record the balances. So you open your rent account. So when you open your rent account, you have prepaid rent. You just ask yourself, prepaid rent, is it an asset or a liability? Prepaid rent is an asset. So if it is an asset, then it means the opening balance will be on the debit side. The opening balance will be on the debit side. So we record balance go down, which is 2,000. And the closing balance, so if the opening balance is on the debit side, then it means the closing balance will be on the credit side, which is also 1,000. Then you look for how much was paid for rent in the question. So when you look at the question, rent paid by bank, which is what? 12,000, which is 12,000. So if it was paid by bank, what you although this time they did not give you cash book for you to know, but then you should know that if it is bank that is paying, then definitely it's going to be on the credit side of the cash book. So if it is going to be on the credit side of the cash book, then it means that when bank comes here, so let's say cash book, bank, when bank comes here, it will be on the credit side, which is 12,000. So after doing this, you balance it. So we normally prepare the expenses account for us to know the exact amount that will go to the P&L account for that particular year. So when we balance this account, we will have 14,000 as the total. And the difference will go to the P&L account. And that difference is 13,000. Okay. So when we look at the question again, we have accrued wages, meaning we have to open wages account. So when you open a wages account, what we have there is accrued wages. You ask yourself, accrued wages, is there an asset or a liability? Accrued wages is a liability, and all liabilities are a credit balance. So meaning the opening balance will be on the credit side, which is 1,500, and the closing balance will be on the debit side, which is 2,000. And how much was paid for wages? If as soon as a year paid, it means it will be on the credit side of the cash book. So if it is on the credit side of the cash book, then cash book will come to the debit side of the wages or the expenses account. So we see cash, which is 20,000. So we balance this. So when we balance this, we have 22,000 as the total, which is the P and L account, 2,500. Then we have insurance accounts. Because when you look at the question, you have prepaid insurance. You have two balances there. We have balances on insurance. So we prepare insurance accounts. Insurance. Insurance account. So with the insurance accounts, you have prepaid insurance. Prepaid insurance is an asset. So it means the opening balance will be on the debit side, which is 1,000. The opening balance is on the debit side, and the closing balance will be on the credit side, which is 1,200. How much was paid for? Sorry, 1,200. Okay, so let's continue. 1,200. Then cash will come here as what's 3,000. Then we balance it. I already explained this in there. the expenses. So we have 4,000, and yet we have 4,000. So the difference will go to the P&L account, which is 2,800. So that is it. Don't forget to come and write your balance breakdown, which is 1,200. 1,200, sorry. Oh, I keep writing 12,000. So we have balance breakdown, which is 2,000. Then we have balance breakdown, which is 1,000. Okay. So when we look at the question, then I think that is all for the expenses account. Then we move to accrued income because we have balances on accrued income. This one is an income, not an expense. It is an income. So we open an income account. Open an income account. Income account. So with an income account, we have accrued income. And I said accrued income is an asset, and all assets have a debit balance. So it means the opening balance of the income will be the debit side, which is 800. The closing balance is also 1,000. So that is all. So when you balance this, the difference will come here, which will go to the P&L account, 200. So when you balance this, we have 1,000. We have 1,000. So balance go down, which is 1,000. So when you are done with this one, you could see that in the question, this with this question, they did not give you the cash account and bank account. So what you have to do is you have to prepare the bank account yourself so that you can get figures or the closing balances for the bank and cash. So with this question, particular question, you need to prepare the cash and bank account. You need to prepare the cash and bank account. So let's prepare the bank account. Let's prepare the bank account. So bank account. The balance breakdown. The opening balance for the bank account is 10,000. It's 10,000. Then when you look at the question, we have purchases paid by bank. Purchases paid by bank. So if it was paid by bank, then it means the purchases will be on the credit side. So purchases, which is 35,000. So 35,000. Then when we look at the question again, we have rent paid by bank. Rent paid by bank. So if it was paid by bank, then it means it will be on the credit side of the bank account, which is 12,000. Then we have other operating expenses paid by bank. So we have operating expenses, which is 5,000. Then when you look at the creditors control account, we had a difference which was on the debit side, which we named it as payment to suppliers. It was payment to suppliers. So we paid suppliers. So if we paid suppliers, then we'll bring it here as payment to suppliers. So since that it was on the credit side of the creditors control account, it will come here on the credit side, which was 500, which was 500. Then after that, we write the closing balance. The closing balance. So the opening balance is on the since the opening balance is on the debit side, definitely the closing balance would be on the credit side. So balance carry down, which is 15,000. Then when you look at the debtors control account, the debtors control account that we prepared, we had receipt from debtors, which was on the credit side. Means we received money from debtors. So if we received money from debtors, then we have to come and debit our bank account. So receipts from debtors, or you can just write debtors, receipt from debtors, which was 31,000. 31,000. So now we are done. We will balance our account. And when we balance our account, we will have the total here to be 67,500. And we have here to be 67,500. So you realize that the difference will come to the debit side. So that difference that will come to the debit side is 26,500. So this difference will be called the capital introduced or additional capital. So we are going to say this capital introduced. Because you already have receipt from debtors here, we don't say again receipt from debtors or we don't say balance carried down, but then we see capital introduced. But then if there was no receipt from debtors here, then we can say that capital intro we can say that receipt from debtors. But then we already have that there. So we say this capital introduced. That is how it is. So if it were to be the difference were to be on the credit side, we would have said this drawings. Yes, that is how it is. We say it is drawings, but then if it is on the debit side, we say it is capital introduced. Okay, so that is it. Then let's prepare our cash account. Let's prepare our cash account. So we have our cash account here. So for our cash account, cash is an asset. So the opening balance will be on the debit side. So balance brought down is 5,000. And the closing balance will be on the credit side, which is 8,000. So when you look at the cash, we have cash sales. Cash sales, so it means the sales will be on the debit side. So we have cash sales, which is 50,000. We have cash sales, which is 50,000. Then again, we have purchases by paid by cash. So we will come here to the credit side. Since it was paid by cash, you write purchases, which is 25,000. Then we have wages paid by cash. So we have wages, which is 20,000. Then the last one, we have insurance paid by cash. So we write insurance here. Insurance, which is 3,000. Insurance, which is 3,000. So when we balance this account, we'll have the total to be 56,000. And again, the difference will come to the debit side, and that difference is called capital introduced. The difference is 1,000. The difference is 1,000. So this difference is capital introduced. That is additional capital introduced. So when you balance the account, the difference that is coming to the debit side is called the capital introduced. That is it. So as soon as you are done preparing your bank account and your cash account, then you can move on to prepare your trading profit and loss account and your statement of financial position. So now let's prepare the statement. Sorry, let's prepare the trading profit and loss account. So we have we have trading profits and loss account for the year. So we always start with our sales. We always start with our sales. So for our sales, we add both the cash sales, which is 50,000, and the credit sales, which is 30,000 to get 80,000. Then we don't have any less, so we less cost of sales. Less cost of sales. So with the cost of sales, we start with our opening inventory. And our opening inventory is 12,000. And we add purchases. So with the purchases too, we add the purchases paid by cash and the purchases paid by bank, which is 25,000 and 35,000, giving us 60,000. So when we add this, we have 72,000 as our cost of goods available for sale. Then we less our closing inventory. We less our closing inventory. And our closing inventory in the question is 14,000. So when we less our closing inventory, we have 58,000. Then there was wages in the question, and we prepared an account for wages. So the amounts that we said should come to the P&L account will come and add it here. So said anytime it is only wages, we add it in the trading account. But then if it is salaries and wages, then we treat it as an expense. But then if it is only wages, we add it to the wages. So the amount we had there was 20,500. So when we add this, we get 78500. That is our cost of sales. So we less our cost of sales from our sales, then we get 1,000 500 as our gross profit. Then we have income there in the question where we did we prepared an account on it, and the accounts that we said 200 should come to the P&L account to add other income, which is 200, and we can have our total income 2,700. So then we will start lessing our expenses, less operating expenses. We have rent. Rents, we had rent to be 13,000. And we have operating expenses. To be 5,000. Let's move to the next page. Operating expenses. Then we have insurance. Insurance, which is 2,800. Then we have depreciation. Remember that depreciation is an expense. So for the depreciation, we have equipment. And the question said you should charge on equipment 10% per annum. So 10% on 20,000, which will give us 2,000. Then we have furniture. %15 on 15,000, which will give us 2,250. So we add all our expenses and we will get 2,550. So when we less this from 1,700, we will have 2,350, which is a loss. So we just write net profit and we just put it in brackets, or you write net loss and you don't put it in brackets. So that is our trading profit and loss account. Now let's move to our statement of financial position. So let's prepare our statement of financial position. Statement of financial position. Assets. 31st December 2023. So we start with the non-current assets. Non-current assets. We can have our cost here. We can have our accumulated depreciation here. Then we can have our net book value here. So with a non-current asset, we have equipment. We have equipment, which is 20,000. And for the accumulated depreciation, we had a previous accumulated depreciation, which is 5,000, and we add the new one to it, which is 2,000 in the P&L account, making it 7,000. Making it 7,000. So when we less the 7,000 from the 20,000, we have 13,000 as the net book value. Then we come to furniture. The furniture, the cost is 15,000. Then the accumulated depreciation is 3,000. The accumulated depreciation is 3,000, and we add the current depreciation, which is in the P&L account. So 3,000 plus 2,250 will give us 5,250, which is 9,750. So when we add this, we will get 22,750. And when we add this, we'll get 35,000. And this will also give us 12,250. Okay. Then we move to the current assets. So with the current assets, we have inventory. The inventory, I always say that when it comes to the statement of financial position, we only bring the closing balances here. The closing balances that we bring to the statement of financial position. So the inventory closing balance is 14,000. Then we have accounts receivable, which is the same as debtors. We have prepaid rents. We have prepaid insurance. We have accrued income, which is 1,000. Then we can bring our bank and our cash. So our bank is 15,000 and our cash is 8,000. So we add this all the current assets to get 46,200. 46,200. Then let's move to the next page. Next page, we will calculate our current liabilities. So we have our current liabilities. We have our current liabilities. So with the current liabilities, we have the accounts payable. We have the accounts payable, which is 5,500. Then we have the accounts, we have the accrued wages, which is also a liability, which is 2,000. So when we add this, we will get 7,500. So the 7,500, we will less it from this 46,200. That is our total current assets. We less it from it. And when we less it from it, we'll get working capital. We'll less it from it to get our working capital, which is 38,000. 700. That is our working capital. So we add our working capital to, we add that to our non-current assets. We add that to our non-current assets. So we add this amount to our non-current assets to get 61,450. And we are done. So this one is assets minus liabilities. Assets minus liabilities. Then we come to finance by. Finance by. So finance by, we have capital. So with the capital, we bring the capital that we prepared in the statement of financial position. Sorry, the statement of affairs at the beginning of the accounting period. We prepared a statement of affairs and we had a capital, opening capital of 57,300. And there was an additional capital that was introduced in the bank account. Yes, there was an additional capital that was introduced in the bank account. So we add additional capital, which is 26,500. And in the cash account too, we had an additional capital or capital introduced, which was what? 1,000. You add all. So that is the total capital at the end. And you get 84,800. Then there was a net loss. There was a net loss. So here will be a minus. So 23,350. So when you add this to, you get 61,450. So then we balance the account. That is all for this question. So we didn't have any drawings, so we just add our capital and then our net loss to get our final answer. That is the solution for this question. If you have any comments, put it in the comment section. I will attend to that. And like and share for your friends, for your friends to also have a benefit of the channel. If you've not subscribed, subscribe for more videos. There are more tutorials that will be on this channel. So subscribe for more videos and also share for your friends to also have a benefit of the channel. And let's grow the channel together. Bye bye. See you in my next video.